Imagine, just for a moment, you could step into a time machine and travel 10 years into the future. What would the world of cryptocurrency look like? Would Bitcoin still be on top, or would we be trading in something entirely new? Today, we're going to seal our very own crypto time capsule and make some bold predictions about where this fast-paced world is headed. In today's world, cryptocurrencies are powered by what's known as blockchain technology. But what's next for this technology? Over the next decade, we can expect some groundbreaking advancements that could change the game entirely. Let's dive deeper into what these might look like. One of the biggest challenges facing current blockchain technology is scalability. As more people use cryptocurrencies, the underlying systems need to handle more transactions per second than they can today. Imagine blockchain ecosystems evolving to handle thousands or even millions of transactions per second. This would be like upgrading from dial-up internet to high-speed fiber optics. How might this change the everyday use of crypto? Could paying for a cup of coffee with Bitcoin become as quick and seamless as using Apple Pay? Right now, most blockchains operate in isolation. But what if they could talk to each other seamlessly? Interoperability between blockchains could allow for a fluid exchange of data and assets across different platforms, much like sending an email from Gmail to Yahoo. This could open up new opportunities for businesses and consumers alike, creating a truly interconnected financial ecosystem. Could this lead to a new era of digital finance where assets are more liquid and markets are more integrated? Current blockchain technologies, particularly those that use proof of work, like Bitcoin, consume a significant amount of energy. But the next generation of blockchain technology could use new consensus mechanisms, such as proof of stake, that require much less energy. How will these more sustainable blockchains change public perceptions of crypto? Could we see widespread adoption in environmentally conscious circles that previously criticized the technology's energy consumption? The future of blockchain could also see deep integration with AI and the Internet of Things, creating smarter autonomous systems that manage our finances and assets. Imagine an AI that could analyze market trends and adjust your investment portfolio in real time. Or think about IoT devices that transact autonomously. Your car could pay for its parking spot without you pressing a single button. What other possibilities could emerge when AI meets blockchain? As blockchain technology becomes a more integral part of our financial system, ensuring the security of these systems becomes increasingly critical. Future blockchains might incorporate advanced cryptographic techniques, such as quantum-resistant algorithms, to shield against potential threats from quantum computing. This could mean that our financial transactions would become nearly unhackable. DeFi has already begun to reshape the world of finance, offering alternatives to traditional banking operations including lending, borrowing, and trading, without the need for intermediaries. In the next decade, DeFi could expand to include more complex financial instruments such as insurance and derivatives, all running on public blockchains. How might this disrupt the traditional financial institutions? Could DeFi become the new norm for personal and business finance? As we consider these advancements, we must ask ourselves, are we ready for the financial revolution that blockchain technology is capable of bringing? How will these innovations impact our understanding of money, privacy, and trust in the digital age? Cryptocurrencies are set to revolutionize the financial sector by becoming as ubiquitous as traditional currencies. Enhanced user-friendly wallets, more stable digital currencies, and regulatory clarity are expected to drive this change, making cryptocurrencies a viable option for everyday transactions. This mainstream adoption could fundamentally alter the banking industry, leading to the emergence of crypto banks that offer all traditional banking services but through digital currencies. These banks might operate globally without physical branches, potentially offering more competitive rates and services due to lower overhead costs. The evolution of financial services will likely see significant advancements due to blockchain technology. Smart contracts could automate most paperwork, from loan approvals to clearing and settlement of trades, increasing the efficiency and reducing the costs of these services. This transformation could democratize financial opportunities, allowing more people worldwide to invest, trade, and secure loans without traditional financial intermediaries. Payment systems are also expected to undergo a transformation with cryptocurrency. These digital assets can make transactions faster, cheaper, and more secure, particularly for international trade. By reducing the costs and delays associated with currency conversion and banking procedures, cryptocurrencies could enable small and medium-sized enterprises to expand their operations internationally with fewer financial barriers. However, the growth of cryptocurrencies also brings challenges, particularly in financial privacy and security. Advanced technologies like zero-knowledge proofs may enhance privacy by allowing transaction validation without revealing the transaction details. At the same time, these developments necessitate updated regulatory approaches to ensure that privacy enhancements do not compromise transaction transparency and security. The rise of decentralized finance platforms further illustrates the potential shifts in the financial landscape. DeFi platforms facilitate peer-to-peer transactions without traditional intermediaries like banks, using blockchain technology to ensure security and transparency. As these platforms become more robust and user-friendly, they are expected to attract a broader user base and could significantly impact the traditional financial ecosystem. As we look to the future, one thing is clear. The way we regulate cryptocurrencies is bound to change. This isn't just about making rules stricter or more lenient, it's about adapting to the whole new financial landscape. Let's explore what that might look like and how it could affect everyone from everyday users to big-time investors. Imagine a world where using Bitcoin is as straightforward and regulated as exchanging dollars or euros. That's where we might be heading. As cryptocurrencies become more common, there's a growing need for a single set of global rules. Could organizations like the United Nations or the International Monetary Fund step in to help? A unified regulatory framework would simplify things, making it safer and easier to transact across borders. DeFi is also changing the game by cutting out the middlemen in financial transactions. But with no central authority, how do we tackle fraud or protect consumers? We might need to innovate solutions that use the technology itself to ensure transparency and compliance. It's a tricky balance, but getting it right could revolutionize finance while keeping it clean and fair. As we depend more on blockchain for secure transactions, we must also beef up our safeguards. Future regulations could set high standards for security, especially to counter threats like quantum computing. And what about privacy? Ensuring data protection while maintaining transparency will be a key challenge. New rules will need to protect users without curbing the benefits of cryptocurrencies. Finally, as the realm of cryptocurrency expands, it brings with it immense potential for innovation and growth. However, this newfound power also necessitates a heightened sense of responsibility. With the increasing adoption of cryptocurrencies, there arises a parallel concern for their potential misuse in illicit activities such as money laundering and terrorism financing. Consequently, there will likely be a push for more stringent regulations to curb these nefarious activities. These regulations may entail advanced monitoring systems to track the flow of digital currencies, ensuring compliance with anti-money laundering and counter-terrorism financing laws. Nevertheless, implementing such measures must be approached with caution, ensuring that they do not infringe upon individuals' rights to privacy and financial autonomy. Achieving this balance demands meticulous deliberation and collaboration on an international scale, as the nature of cryptocurrency transcends geographical boundaries. Therefore, while striving to safeguard against criminal exploitation, it is imperative to uphold fundamental principles of privacy and human rights, fostering a regulatory framework that promotes both security and individual freedoms. And as we navigate these regulatory changes, we should think about their wider impacts. How will they affect global financial freedom? Could they make cryptocurrencies a mainstream financial option that's both safe and innovative? It's a challenging journey ahead, but getting these regulations right could help the crypto market mature and flourish. Cryptocurrencies are transforming how we view and interact with the economy on a global scale. By offering financial services to the millions currently excluded, digital currencies may empower entrepreneurs in developing regions, sparking economic growth and innovation. At the same time, cryptocurrencies are addressing critical environmental issues. The shift towards energy-efficient mechanisms like proof of stake promises a more sustainable approach to digital transactions. This evolution could set a new standard for environmental responsibility within the tech industry. Cryptocurrencies also have the potential to streamline international trade. They can eliminate cumbersome currency conversion and reduce transaction fees, offering small and medium-sized businesses the opportunity to explore international markets more freely. This could reshape global trade dynamics, making the market more accessible and less biased towards large corporations. Moreover, the transparency and security offered by blockchain technology could revolutionize societal structures, from reducing corruption in charitable organizations to securing property rights in regions with unreliable documentation. Cryptocurrencies could enhance fairness and accountability across various sectors. Regulatory landscapes are adapting in response to these changes. As countries recognize the potential of digital currencies, refined regulations are emerging to protect users and encourage innovation. This delicate balance will determine how widely these technologies are adopted and their impact on global economies. Lastly, the resilience of digital currencies during crises like the COVID-19 pandemic underscores their potential to maintain and even enhance economic activities during future global challenges. This could fundamentally change how we prepare for and respond to crises, offering reliable economic infrastructure when it's most needed. In the broader scope, the democratization of financial systems through cryptocurrencies offers a more equitable platform for global participation. This could lead to a more inclusive and balanced global society where economic opportunities are not limited by geography or socioeconomic status. As we look forward to the next 10 years, it's clear that the potential for cryptocurrencies is as vast as it is exciting. From transforming the way we manage our finances to redefining global economic structures, the impact of cryptocurrencies will likely be profound and far-reaching. But will these predictions come to pass, or are they just hopeful glimpses at a future still out of reach? What do you think? Are we headed for a crypto revolution, or will these developments be just a drop in the digital ocean? Don't forget to subscribe to our newsletter for more insights, updates, and buy and sell signals tailored for the evolving crypto landscape.